a week it was gone by. The fact that we did manage to scale expiry with quite a photo finish, although the week gone by on Friday's trading day may have been a hint of red, but that doesn't mean we didn't scale those fresh life highs for the frontline indices in the week gone by. You could attribute that to the fact that, yes, of course, you've got the DII flows that have been supporting our markets. But guess what? You had the foreign institutional investors as well, which at least in the calendar year so far pumped in the highest, in fact, at over 25,000 crore rupees. So 8 straight days on the trot that you did have the markets holding out very comfortably in the green. And if we were to categorize on a month on to date basis how the indices have performed, it's been a serious outperformance by the frontliners. Nifty 3.7% gain. You've had the mid-cap index, which about 1.8%, and a little bit of underperformance when it comes to the broader end of the market, and that is the small-cap index. Clearly, the China stimulus push did a lot for the entire metals basket because that sector was comfortably in the green. So, Nikunj, a pretty decent week gone by, and FII flows as well supportive.
Yes, Avan, it's just been a good week and a good month. We've hardly seen any correction, so to speak. We're comfortably closing above 26,000. And it is absolutely amazing the kind of strength what Indian markets have actually exhibited. Rarely do you see such a straight line move. And I think this straight line move is something which has surprised, and it has more than surprised, it has delighted everybody. Variety of factors which are at play. First, I think, is largely global in nature, which is that globally, everyone is now rallying on the same side after the Fed rate cut. Yields are down, crude is down, risk-off moment is back, and the most important differentiator between the month of September and August was foreign institutional investors are back. So while the cry for correction continues, the market continues to surprise us on the upside, and the brute force of liquidity is so strong that no one can really put a foot wrong. So 26,000, lot of sectoral churn. Global strength is strong, and foreign institutional investors, they're buying more and they're selling less. So I think that is the setting on the table. Where do we go from here? So the question you got to ask yourself is that how will October be different from September, or how will like September was different from August because of FII flows and the Fed announcement. How will October be different? And I think October has potential to be dramatically different, purely in terms of news, purely in terms of the festival season impact, purely in terms of local politics. We'll be nearing the state election dates, and then it also will coincide with the earnings season. So while we've had 4 good series, a linear gain of about 4,000 points on the Nifty, but October has not a promise, but October could be a very different month, largely because of news, earning, festival season impact, and you will have this entire China factor which has emerged in the last couple of days, which could have an impact on Indian flows. We'll talk about it, but I just want to make one point here, just to park a thought here, that September was very different from October because of flows and Fed. The month of October could be very different from the month of September, largely because of festival season and because of earnings.
Oh, yeah, absolutely. But look what's happening all around us, especially the global picture, because things are a lot different over there. Look at Japan's Nikkei, for instance, this morning. It stumbled 4.5% as I speak right now. The yen has now weakened against the dollars. Traders are reacting to the results coming in from the ruling Liberal Democratic Party election, which was held just about Friday. So that's one reaction. On the other hand, the China rally continues, and it's been an astounding rally from both the Shanghai as well as the Hang Seng all through last week. Their PMI numbers for the month of September came in at 49.8, and this is a beat considering what the market was anticipating, which was 49.5, which was expected by a bunch of bankers and economists. And this has marked the 5th straight month of contraction for the manufacturing sector in China. So divergent as it may be in terms of what the market reaction is, what the economic data points are, but China is still running high on the stimulus by the PBOC. Having said that, the geopolitical tensions as well have escalated over the weekend, with Israel striking Beirut city limits for the first time now.
So Aisha, let's look at the geopolitical tensions. I mean, we've seen when the geopolitical tensions, they surfaced up for the first time in 2023, the market reacted to it for a couple of days and then they moved on. So what happens in terms of geopolitics, I think it is an isolation. It is not something which will really have an impact on the financial market per se. That is what recent experience has told us, because it is very localized and it's unlikely to have a very large permanent impact. We are talking about permanent impacts here. So the permanent impact which happened because of Ukraine and Russia was there. But this impact, but this time around, I think the permanent impact purely in terms of size and financial market advantage or disadvantage may not be there. But I think this China factor is crucial, and it is especially crucial, and our viewers should understand that China has been an underperforming market. It's a market where flows, where foreign institutional investors have invested, and the experience has not been very gratifying. This sudden comeback in China, is it a deep swell, or this could be a time when post-Fed cut, this time flows which were expected to come to India, they would actually move into China. If that happens, then this entire assumption that FIs are back and they are here to stay may just get challenged. But if the China trade becomes more and more pronounced, which is the comeback in China trade, surely it will have impact on metals, psychologically more rather than reality, rather than based on realistic numbers, and definitely in terms of FI flows, because India has historically competed with China in terms of flows. But if China comes back, let's see what happens. I doubt that this is going to be sustainable. That's my personal view, because China has far deep-rooted problems. We'll talk about it, but those deep-rooted problems are not going to get addressed in a hurry, so to speak.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.